Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'm sure it's the same stuff that I'm seeing in the markets with a lot of the charts, silver, copper, energy, all those types of things. It's generally related to three topics, the stuff that we're going to cover: wealth building, financial topics, and or commodities. So let's see what people are sharing, and let's dive in there. You want to follow me, it's at Finding_Finance. And if you need help with anything, check out finding-value.com, where I go over individual companies, sectors. I share exactly what I'm doing. You can see my portfolio. My 5-year run rate of my annualized return has been 41% when I did it at the beginning of this year. 41% is my annual return for the past 5 years, if you want to know. All right, so let's dive in there, guys. Use link. So here's gold, a replica of the gold move that came out of the almost identical breakout in 2019 would look something like this. So gold spot divided by the US dollar breaking on out to the upside. If it were to repeat like it did back here, we are looking at a $3,400 per ounce move potentially. But that does not mean that we'll get the same move. It could be less, it could be more. It highly depends on some factors that the market, there we go, depends on some factors of what's going on with the market. If people get scared of inflation, if we get more money rotation, if people get scared of bonds, it could very well morph into something that is way larger than what he's got projected here. Jeff Clark says, if this is the beginning of the next silver spike, the average gain since the 1970s is 150.4%. All but one was at least 50%. 5 were triple digits. So 5 times in history, we've seen triple digit moves. I'm in the camp that we could get even something that's bigger than 743%. I know I'm crazy. I get it. Whatever. The reasoning behind that is that we are squeezing up and we could engage a larger triple top. It would be a triple top breakout if we get up there. So we'll probably hit it again. We'll have a triple top, and then we'll probably loop back around and break back out of it. If that occurs, then that breaks one of the largest patterns that I've ever seen of the cup and handle, which means that we could see a major silver spike that could maybe even be as big or bigger than the 1970s. And I know that sounds crazy. Yes, I'm crazy. Yes, I look at all these charts. Yes, I do measured moves and fractal analysis and all that stuff. But I'm going to be a believer until I'm not, and we go through it. If it's not that big, okay, I made money. It's just not that big. But I tend to believe that the chart pattern being the size that it is going to probably lend itself to a very big move. And I don't think it's going to stop at like 100% gain. I think we're going to blow through probably $50 an ounce and go at least to 100 and maybe even multi-$100 silver, which would put us somewhere in between, these moves and probably this move at a minimum. U.S. oil production is likely to average 12.8 million barrels per day entering Q2. So you can see that oil production, we were up over 13 and a half. We are now down to 12.8 million. We can almost use a rising wedge on this thing, and it looks like we're in a downtrend. Kind of funny that we can use technical analysis, maybe even on U.S. oil production. Maybe, maybe not. Have we peaked in terms of oil production? Some people think we have. And if we have, I'll just say this, guys. If this is peaked, that's also the same setup as the 1970s when we hit peak oil in the United States. If we hit peak oil here, this is going to be the world peaking out, which if this is the case and people figure that out, it's going to dwarf this. It's 743 is going to it'll be dwarfed. Like you'll just see this thing go spike off the page. Because then what occurs is your energy that backs all the bonds and currencies, if that starts to decline, that means that your GDP, which is like a 0.97 R squared value of correlation to GDP and oil production. If oil goes down, your GDP will go down. If your GDP goes down, the design of the system means that your debt needs to go up exponentially. And if people figure that out, they're going to run out of bonds. If they run out of bonds, you're going to get a spike in interest rates, and people are going to be holding worthless pieces of bonds and worthless pieces of paper called currency, because what they're going to find out is the future uh, GDP will be less, which means that all of the projected growth rates of stocks are wrong. They're mispriced. And that's where you're going to get a big pullback and a shift of money towards gold and silver. If that is the conditions that do occur, and I'm not saying that it will occur, but it could occur, that means that people are going to run to precious metals to preserve wealth, perhaps. And if wealth preservation occurs on a worldwide basis, the numbers that I've seen where the money supply and the price of gold gets covered are so ludicrous that you would call me crazy if I even mention that number. It is so far up, and it's a 6 digit, maybe even a 7 digit number now, with all the money printing that has occurred. The 6 digit number, I think it was something like 200 and something $1,000 an ounce for gold. If we were to go and back every single currency in the world with gold, and that was back in like 2016 or 18 or something like that, was the last figure. So it's probably at least double that figure now. It would be my guess. I know that sounds crazy, guys, and I don't want to come off as a crazy person, but um, the setup here looks very eerily similar to the 1970s, which was only contained to America. This is worldwide. This is a worldwide game now. And if we get worldwide oil production to peak at some point, I mean, the bond markets and currency markets, they're going to look ugly. Today's oil setup reminds me of gold a few months ago. Energy has shifted from a prominent narrative to one that's been largely neglected. Consequently, notice that the implied volatility in call options for oil gas stocks is near a historical low. The $85 is an important technical level, and a breakout above it could signal a substantial shift in the energy industry, potentially driving prices toward previous highs of $130 a barrel. And this is the energy stocks call option implied volatility. It's way down, which is very similar to the beginning of some of these other eras. Another thing to think about too, this era here is where gold and silver took off, was in 2018-ish. We had a yield curve inverted and then the yield curve uninverted upwards. So it looks like to me that we've got a similar setup that could be occurring, which would also be bullish for gold and silver and other precious metals. Here's silver. Inevitables are here. I see you. The downtrend line that is basically breaking to the upside here. This is going to be a big move, guys, and it does it very quickly. We've got silver, another one who's been accumulating $2,000 gold and $25 silver long-term stackers. We were up 3.5% in silver, but we're also starting to get a breakout here. This is my best estimate for when the bull market ignites properly, and basically we're pushing through it right now. There's your wake up line, and then we've got an initial target of $38 to $50, and then you get a handle. This will be a cup here, and then probably another handle formation. And then we break later 2020s into some gigantic bull market is my guess. Coming down to JC Paris, says we continue to see a lot of things that were not happening last year. This market is not the same market we had in 2023. We don't have to pretend that it is. This is XLE outperforming the S&P 500. So commodities have broken that downtrend and we're starting to outperform. Oil services are starting to outperform SPY, a broken downtrend in that ratio. And then explorers and producers versus S&P 500, XOP is what he's using. That is also starting to outperform. So we are turning the bottom here in all of the energy companies, ETFs, and outperforming the S&P 500. That is what I'm talking about. Michael Oliver says, the thing about commodities is they're intensely boring until they're not. For example, copper today, cocoa over the past several months, and I know there are some who get it at Cominvest. That's why we monitor and update them every month, and that's why I watch them too. Decades of returns can happen in years with commodities. Dan Edwards says uranium equities, we're having a great morning and all of a sudden plunging. Does anyone know why? I smell a news event. I don't know if it's news, but I think it's just momentum and sentiment has changed in uranium for a period of time here. And what I'm going to say is don't try to figure out why necessarily. This has already occurred. We've already had the sell off. And a news event coming, it doesn't matter. But is the fundamental picture changed for uranium? My answer is undeniably no, it hasn't changed at all. So stick in it for the long term. That's what I'm doing. I'm across the whole commodity complex, and I would view this as a huge buying opportunity if you guys are bullish on uranium. Wait for the momentum to dissipate. Wait for a bottom. And again, I will tell if you're part of the website, you guys know I let you guys know what I'm interested in. And I've been talking about uranium maybe having some short-term weakness. Obviously, I don't know with 100% certainty. I just said, you know what? Looks like we've got some weakness. We could fall further. And whenever this bottoms, I might pick up some more shares. I even let you guys know that during the question and answer session. Holy crap! Copper may actually be breaking out. Stay calm, everyone. See you at $5 a pound. And copper is breaking on out. You have another one that's broken out this way as well. So yes, it looks very good. Rick Roll says, I haven't seen a greater disconnect between the gold price and gold stocks in my career since the early 1970s. I have also not seen as much investor hostility to gold stocks, nor have I seen gold stocks at these valuation levels relative to book or relative to free cash flow. That is the opportunities, guys. I even talk about all of this, and the charts look pretty dang good. Huge opportunity in my opinion. Silver up over 3%, printing 25.21. Who's got the popcorn ready? We're ready for a break here, guys. The one black line to rule them all. JSG, another bullish EIA weekly for 313. Total commercial petroleum stocks are down 4.7 million barrels of oil equivalent. Lowest reading since January of 23. Today's increased price move in WTI is fundamentally justified. The implied fair value price of oil right now is $84 per barrel, or $4 undervalued from today's WTI price. So this is the dot plot, and we're a little bit undervalued. And again, if we continue to have inventory draws, that's going to drive the fair value of oil higher and higher and higher. And I do believe that is what we're going to get this entire summer. We're going to continue to move higher with oil. Tommy says, silver just poked its head above the 15-year resistance on the quarterly chart. This is probably one of the most compelling macro opportunities that I have seen, particularly with the gold to silver ratio still near 90, which means we've got a lot of runway in valuation against gold and other asset classes to really pump it here, baby. And again, this will activate the larger cup and handle from the 1970s till today if we get a big move. Bullish trend, this is the TSX, can do the same move as Japan ETF. We've been moving sideways recently from 2021, and we could get a break here at any second with a move on up of this resistance consolidation zone. Today, copper prices surged to a 7-month high following Chinese plans to cut output. This is likely just the beginning of a much larger move. Oil and other commodities are also poised for substantial price rises. This shows inflation will move further above the Fed's 2% target. I agree, Peter. Christine says, imagine wiping out 20 years of energy security inventories for short-term political gains. That's our Joe Biden. The U.S. petroleum inventories, crude, SPR, and refined products are at the lowest point since end of 2022. This was the last bull market, that occurred in 02, 04, 06, 08, we had an increasing inventory level. We have declined our inventory levels dramatically of all of those strategic reserves. And we are at very low levels with a very low price. When they go to try to refill this, it's going to drive prices dramatically higher if they try to refill it. If they don't try to refill it, then your entire inventory levels in relationship to total production of oil, you're going to get a more volatile oil price. And it could dramatically spike if people get afraid that we are running out of production capacity and or inventory and production capacity at the same time. Lisa says the Atlanta Fed's gauge of sticky inflation has risen to about 5% on a 3-month annualized basis. Inflation is moving in the wrong direction for the Fed. So it's interesting that the market's base case is still that the Fed is going to cut rates by 100 basis points by January 2025. This is the CPI moving on up. This is my more articulate bull case. So he says, I'm so bullish stocks, I'm really not trying to contain myself. The Fed is making a massive policy error, easing into this much economic strength and seems hell-bent on doing it regardless of the inflation data. The US is entering peak demographics right now for consumption. This was going to be the all-time peak for the US business cycle anyways. Then the government decided to run the biggest deficit ever with the lowest housing inventory levels ever. Oh, and AI happened and inventories are low. So we're coming up into this big bulge of millennials coming into home buying years and also into working years and eventually into peak spending years coming up here, which is part of the business cycle, is what he's saying. Dead on course to balloon here, which we have. We've got housing supply and prices. Housing supply is still under 3 months of inventory, super low inventories. And house prices will continue to move on up in prices. And then nominal total net worth households and nonprofit are up in nosebleed territory in terms of total net worth. Nice move there. We've got the longest yield curve inversion in history. The 10 and 2-year yield curve has been inverted for 423 consecutive trading days. Now the longest yield curve inversion in history after surpassing 1978 to 1980. Silver is a generational opportunity on breakout. Note the two previous similar blue dashed line marked breakouts should get a historical move here once it breaks out. You damn right I agree with this. Silver on a monthly log chart ready to rip. And if we get a nice strong closing on the month that breaks on out, I mean I'm bullish already, guys. Don't get me too bullish up here. I'm too bulled up here. Got to calm down. Here's energy for bullish trends. You can see what's coming next. Could be vertical lines, which I do think is coming. I think we're going to see a big move in oil, a big move in silver and gold, a big move in copper. These commodity areas are looking pretty good at this current time. This is the commodity supercycle comparison. So early stages of a supply-constrained commodity supercycle. This is the start to peak 1970s super cycle and the 2000s super cycle. And this is kind of them overlaid. You get your big move up, the pullback, the big move up, the pullback. And then this one is a big move up here, and then the pullback goes a little bit longer. So it looks very similar to previous super cycles, and the super cycles ended at 650, and this one, the index was almost 800, and we were at an index of about 300, starting at 100. And days of the super cycle that it took. Something like that is coming, boys and girls. NVIDIA is the Cisco of the AI boom. Growth set to slow, says Kathy Wood. And you know what? I actually agree with her. I don't agree with Kathy Wood on most things, but this one I do agree with. And then we've got the crude draw. I think I said that one last time, but we were drawing pretty big on crude, Cushing, gasoline, and distillate across the board, which is causing prices to rise for oil. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We still have that discount going on, LEAP, if you'd like to join. And we've got a 7 a.m. question and answer session coming up on Saturday, Mountain Time. All right, guys, we'll catch you later. This is Finding Value.